Peter, first of all, thank you so much for taking the time to speak with us today. What is it that you look after at SmartStream? What does your day-to-day kind of entail?
So I'm the global head of business development within SmartStream. So I'm responsible for cash and intraday liquidity as part of our broader product suite that we have. So complementing with our reconciliation business, our collateral management business, our corporate actions business, the pillar that I'm responsible for is cash and intraday liquidity.
So what are some of the primary challenges that banks face when it comes to liquidity, especially against this backdrop of some of the recent US bank collapses?
The thing here is that there's been 50 failed banks in the last 10 years in the US. So we had a quiet period of 21 and 22 where there was no failures, and then there's obviously been 3 this year. If you then kind of roll that out into kind of value, the 50 that have collapsed, that equated to 6 trillion in assets and around 5 trillion in liabilities. So some massive numbers around that front. The key there is that across that decade, the interest rates were only at around 2.5%. Now they're at 5%, and that's what's kind of pushing more pressure on banks to better manage their money. I mean, we'd seen the way that Silicon Valley was, the situation there. Obviously the CRO was an issue, but I think that reflected the broader mismanagement of intraday liquidity, and that's what's brought that to the forefront in the last few months rather.
I remember seeing a graphic which was the last 10 years, and it had the size of each bank and and the number of failures, and it was all very much 2007, 2008 kind of era, and then nothing, and then 3 big ones kind of at the end.
Yeah, so I think there's another thing that plays into this as well is with regards to social media. So you have the social media effect, and you have the effect of uninformed people advising uninformed people what they should or shouldn't do with their money. So if you kind of look at what happened with the SVB lost 42 yards in a 24-hour period. You'd have to go back to 2008 for Washington Mutual lost around 16 billion across a 9-day period. So that kind of, as we've kind of evolved, will there be further runs on the banks? Yes, there will be, but then treasurers and regulators have to better manage their intraday liquidity.
When it comes to liquidity, obviously people who are very much focused on that's what's keeping them up at night. But because it's now been brought to the forefront, banks are a lot more guarded, and they're a lot more prepared for it because it has been such a big mainstream news story.
So the way that you got to kind of think of it is that, so if you think about capital and liquidity, so if you mismanage your capital, it's like you're going to die a slow death. If you mismanage your liquidity, it's like dying of a heart attack. So that's what treasurers are more focused on now, is managing the liquidity, because that's going to catch up with you faster than mismanaging your capital. So again, the way that I see it is that European regulation, banking regulation, is a lot tighter than what happens in the US. So I think loose regulation has created this whole kind of how the whole thing's played out really. So they need to revise the regulation, and I expect that to happen sooner rather than later. Again, with where the thresholds are at the moment, up to 250 billion, you can have 249 billion and change and still be below. So I'm expecting that to be tiered very, very, very soon.
Is the global banking system looking a little bit more vulnerable with interest rate rise? And do you think there could be another liquidity crisis on the horizon?
So I think it goes back to how do you manage your intraday liquidity? What are you looking at? Are you looking at projected or are you looking at actuals? And if you think about the way that a lot of banks have antiquated, fractured infrastructure, that's been little or no investment over the last 10 or 15 years, and the time has come basically for this to be addressed. So kind of the way that I see it is that you're given 3 choices, like the 3 Bs. Do you bolster what the systems that you have already, essentially putting sticky tape on what's there? Do you build? And if you're a big player, tier 1 name, yes, you probably can afford to build. If not, you have to buy. So then you're looking to partner with a trusted advisor who can help you complement and partner with the systems you've got in place. So yes, there will be. I do see there being further catastrophes, I suppose, within some banks, because some people will not learn, And it goes back to what I said before, and the uninformed advising the uninformed, things can happen quickly. What treasurers have been saying to me and cash managers have been saying to me is that the boards are putting them under pressure to come back to say, what are you doing in a what if scenario? And the regulators are going to be coming back with the what if scenario. How do you play this through? What happens if there's a run on the bank? How do you better manage your money? And then it also goes back to the projections versus actuals. The more information that you can ingest, and as long as all of the spokes are pointing into the hub, you're creating a better position for you. So projected vis-a-vis actuals, you're working on truer numbers, and that's what treasurers and cash managers need to do to better manage their intraday business.
How did banks end up in this current situation? And do you think that insured deposits are a factor in this?
Uninsured. So if you look at FSCS in the UK is £85,000. FDIC insurance is up to $250,000. So the average person on the street probably doesn't even know that they're covered in the UK up to 85,000, to be honest. And some of the numbers that you read for what people think that what the street says that people are aware of, I don't really kind of buy into that. I think the numbers are lower because not everyone's going to be aware of the uninsured component to it. Is it going to make a big difference? Not many people are probably going to have 85,000 in one account anyway, but people will kind of probably better learn to manage their money. I think there's the way that are people going to open multiple accounts and diversify that way? We're not talking about the kind of the back of 2008 when the Lehman situation created diversification of Cash 7 client monies. We're not going to go down that route. Some people will diversify and open different accounts because it's quite easy now. But I think rising interest rates are going to play a significant part as well, because where treasurers and cash managers, when rates were zero or next to nothing, there was a certain amount of discipline that was still required to manage your money, but it was whether you were massively long or massively short, it didn't really kind of make much difference because the rates were zero. Now the rates are 5% or 5.08 in the US, and we're heading to 5 in the UK. It becomes an expensive hobby, so you need to be managing your funds, and it's an opportunity cost as well.
Do you think that one of the things that, there's obviously going to be comparisons with 2008 just because it's the most recent financial crisis, but since then, the technology that we have to hand, our ability to understand where we are, how far we can push liquidity, we have more tools at our disposal to understand that. Is that something that's a little bit dangerous perhaps, that we can push a bit further based on the knowledge that we've got, or is that something that it gives more transparency?
I think it's all about consuming data, because a lot of treasurers goes back to the antiquated and fractured infrastructure. I was speaking to some treasury people yesterday, and the guy told me I think they only had like a 50% confidence level of their positions at any point in the day. So shouldn't be filling you with confidence. And again, it all kind of boils down to the more information you can kind of pull into the centre, the better armed you're going to be. And then there's always going to be gaps. But it always goes back to this projected versus actual. The more ledger information that you can consume, and the more debits and credit information you can kind of consume as well, you're able to match these off in a real-time fashion and move from there.
How can we bridge key technological gaps when it comes to real-time intra-pay liquidity systems?
So it goes back to partnering and complementing what you've got. So within the cash and liquidity space, our cash management and intraday modular platform that we have, which can be deployed on premise or on the cloud, fully workable solution. We've got clients in every continent. We've been doing this for a long time. We've got some deep relationships. We've worked with probably 3/4 of the top 100 banks, and we've got very good understanding of the systems.
The last thing I want to touch on is obviously we're at Money2020. How have you found this whole Money2020 experience? How have you found the event?
So yeah, we were here last year. I think it's a breath of fresh air, really. There's a lot of young and fresh ideas that are kind of being shared. Again, from our focus is speaking to banks, and it's interesting to kind of see what journey the banks are on as well. And it goes back to having better arming people with the correct information to make their lives easier. And again, it goes back to where we were with the treasurers and cash managers. Their boards are going to be asking the question, the regulators are going to be asking the question, how are you managing your money, and have you got a handle on this? I was speaking to one client not so long ago, and the question I asked was, what is your current state vis-a-vis your future state? And he said, my current state in managing my intraday liquidity is on Excel, my future state is not Excel. And that's when we were able to kind of partner and complement what they have.
Amazing. Well, thank you so much for taking the time to speak with us today.
Brilliant. Cheers.
Thank you.